let's do one question on payback period, and then we can then move to the accounting rate of return. Okay? The accounting rate of return. Right. So I think we're going to stop at the accounting rate of return for today. Then tomorrow will be a marathon. Please try to come along with your food wherever you're going to be. I want us to start from 12 midday till anytime we finish the syllabus. Okay? 12 midday till anytime we finish the syllabus. So take note, tomorrow we'll start from 12. Okay, so let's proceed. Right, so I'm going to open, yes, I have to open a new file. Okay, so we all know how to open a new file. How do we open a new file? Can someone direct me? I want to open a new file. Since we are starting this investment appraisal today, we have to put all our solutions to the questions in one file. So how do we go about opening a file under Google Sheet?
Sorry, Mr. Fofana, I want to ask you something.
Yes, go ahead.
Yeah, the ones using their computers offline, can they use Excel?
Sorry?
I said once with computer offline, can they use Excel?
Sorry, when your computer is, can you say that again? Sorry, I'm not getting you.
I said the ones using their computers offline, can they use Excel?
Yes, of course, you can use Excel. You can use Excel, of course. You can use Excel. Yes, go ahead with Excel.
Okay.
Right. Okay, so how do we go about opening a new file using Google Sheet?
Can I try?
Yeah, go ahead, Umar.
I think you should go to your Gmail.
Okay, you go to your Gmail.
Yes, when you go to your Gmail, there will be 9 dots on top corner of your right hand, and you click that 9 dot.
Okay.
After that, you go to Drive.
Okay. So it's like what he's explaining is when you go to your Gmail, there will be 9 dots on top. After clicking the 9 dots, you open your Google Drive. Okay, and then what next?
Yes, after that you can just click New. After you will see the Google Sheet. When you click it, then the file will open.
Okay, so right. So once you click on the 9 dots, right, and select Drive, this is the drive. So how to call it? A screen like this will appear. It doesn't have to be the same as mine because what is in mine and yours is different. Okay. So once you have a screen like this, then you come here. I know all of you by now knows how to open a new file. So we just recapping on it. Okay. So we just click on plus and then choose Google Sheet. So that will give us our new spreadsheet file. Okay, that will give us our new spreadsheet file. Okay, so I'll stop this, then I'll project this one. And once you open a new file, what is the name given to it?
Untitled spreadsheet.
Untitled spreadsheet, okay, as you can see here. So you have to title it. You have to give it a name. Okay, so we're going to call it investment appraisal. Investment appraisals. And I just put September 20 semester. Right. So that's the name of the file, Investment Appraisal, September 20 semester. Right. So we're going to do a question on payback period. So I just call it, this ones don't have question number, this question number, that. Okay, so I'm just going to name the sheet as payback period, P-A-Y-B-A-C-K, payback 1. So I just call it payback. Well, I just call it payback because we are doing only one question on payback. Okay, so the question we are doing actually, it was projected on the screen, so you should have screenshotted. Also, I've sent in the notes before the start of the class. Have you downloaded the notes? I sent the notes on the group, so you need to have that handy. Okay, so I'll read the question. An asset, the one that says example payback period, an asset costing 120,000 is to be depreciated over 10 years to a nil residual value. Profits after depreciation for the first 5 years are as follows. Okay? Profits after depreciation for the first 5 years are as follows. Okay? What are these profits? What are these profits? What are these profits called?
They are cash flows, I think, Mr. Fafana.
Profit after depreciation, cash flow.
Profit after depreciation is accounting profit.
Accounting profit, exactly. Accounting
Accountant's profit.
Yes, accounting profit, exactly. So profit after depreciation is accounting profit. So do we need accounting profit or we need cash flow to calculate our payback period?
Yeah, we need cash flow.
We need
not accounting profit.
We need cash flow, exactly. So like I said, the only time we use accounting profit is when we are doing ARR, accounting rate of return. So take note of that. The rest of the time we use cash flow to calculate our payback period, to calculate our DCF techniques as well. Okay? Good. So we have got accounting profit, and we all agreed we need to use what? Cash flow. So how do we turn accounting profit to cash flow? How do we turn that? How do we do that?
I think you should add back the depreciation.
Okay, so first we calculate the depreciation and we add it back. Okay, we calculate the depreciation and we add it back. Okay, so that's what we do. So I just call the question an asset. Okay. Now we will leave the first 14 rows on top to be our working story, to be our answer, and then we will do our workings here. Before that, let me zoom it so that the rest of you can see it clearly. I'll zoom it to 150%, and I'll make the characters also big. Instead of 10, I'm gonna increase the font size to 12. Okay, so we're going to have our workings, and what will be our workings? Our workings will be the calculation of what? Depreciation. Okay, how do you calculate depreciation in this case?
In this case, it is straight line method.
It's straight line method. Excellent. How do you know that it's straight line method?
Because they give you the number of years instead of the percentage. No, they give you the number of years instead of, you know, when it is reducing balance method, like every year, the depreciation that was there should be subtracted first before you check.
Yes, in that case, they'll give you a percentage. You have said it rightly, Umar. No, don't worry. So they have given you, in this case, they've given you the cost, they've given you the scrap value, and then they have given you the number of years it's supposed to be depreciated over. So naturally, we know it's going to be a straight line method. Okay. So how do we calculate depreciation using straight line method?
In that case, you are just going to take the number of years that asset is expected to live, you divide by the value of the asset.
The useful life divided by the value of the asset. Is that correct?
Yes, sometimes it can be correct, but sometimes you have to subtract the residual value. But in this
There
case,
you go. There you go. No. But even if the residual value is nil, because we've been told that the residual value is nil, isn't it? Okay.
Yes.
So depreciation using straight line method is cost of asset minus residual value minus residual value, all that divided by what?
The useful life of the asset.
Divided by the useful life of the asset. So it's the cost less residual value divided by the useful life of the asset. What's the cost here?
120.
Okay, 120,000 minus what's the residual value?
120.
What's the residual value?
Minus 0.
0.
The residual value is 0.
0.
Okay, so we put all that in brackets and we divide it by what's the useful life?
10 years.
5.
10 years. Okay, so once we do that, we've got a depreciation of 12,000. Okay, so we've got our depreciation at 12,000. So I'm going to format it to number formatting, and I'll reduce the DP to 0 DP. So our depreciation is 12,000 per annum. Take note, this is per annum. Depreciation is calculated per annum. So 12,000 pounds per annum. Okay, so this is our depreciation. Now, what we need to do is let's do the layout of our answer. Okay, the layout of our answer. So we have the year. We have profit after depreciation, which is given in the question. Profit after depreciation, the EPRCM, I just sorted it. Okay. So profit after depreciation. Okay, so what do we need to do to this? We need to add back depreciation, isn't it?
Yes.
So depreciation. And then when we add depreciation to profit after depreciation, what do we get?
We have cash flow.
The cash flow.
Okay, first, let me ask, why are we adding back depreciation from profit after depreciation and not deducting it? Why are we adding, but we are not deducting? I think depreciation is supposed to be deducted from profit. Is that not the case?
Yeah, depreciation is non-cash expense.
But depreciation is non-cash item.
Huh?
It's non-cash.
Depreciation is a non-cash flow item. That is why we are
Depreciation is a
adding it back
non-cash.
to the
That's
cash
why
flow.
we are adding it back. But why are we adding it
Yeah.
back? We are adding it back because it was deducted before.
Yes, yes.
Good. To arrive at our accounting profit, we know that we have to deduct depreciation. And because depreciation is a non-cash item, we are adding it back. We are not supposed to deduct non-cash item. Because if we deduct depreciation, we are going to deflate the cash flow. Okay? So we know what depreciation is, isn't it? Depreciation is simply an allocation of purchase cost of fixed asset to each accounting period that benefits from its use. It's just cost allocation. No cash changes hand. It's a wise way accountants have developed to kind of keep some money aside so that you can be able to replace the asset once its term is over. Simply, that's what depreciation does. Because what you do is the value of the depreciation, in this case, the 12,000, the 12,000 is going to be knocked off against your profit. Then that means you cannot get access to that 12,000. So in a sense, what are you doing? You are kind of saving that 12,000, isn't it? But in actual sense, there is no payment no cash changes hand when it comes to depreciation. But in a sense, you are kind of keeping some money aside so that you can be able to replace the asset once its term is over. Is that understood, class?
Yes.
So
You have to rationalize these things. You know, not a question of learning, rote learning them. You have to understand why they come to be in the first place. Okay? Is that clear?
Yes.
Okay, good. So now let's have our year. Then I'll show you how to do a fast numbering. So let's say we want year. This one is year 1 to 5, isn't it?
Yeah, year 1 to 5.
Okay, let's say we want year 1 to 5. We want to quickly type this year 1 to 5. So what are we going to do? Are we going to type year 1, year 2, year 3, like that? What are we going to do?
Now you will type yeah 1 and 2, then you drag it.
Who is saying this?
Janko.
Janko, where did Jeta Kunangas learn Excel? How come you know this? Okay, correct. What Janko says is right. Okay, because what some people will say is they'll say, okay, you'll type 1 and you drag. If you type 1 and you drag, it's going to give you only 1. Okay, but if you type 1 and then next you type 2, now spreadsheet is going to predict your pattern. And what is your pattern? Your pattern is you are adding 1 to the preceding number. So once you highlight the 2 of them and you drag, it's going to give you a sequential number. Just like when you want, for example, only even numbers. Once you type 2, then next you type 4. If you highlight these 2 numbers and you drag, look at it. It's going to give you all the even numbers. It's going to give you a gap of 2 between the numbers. Can you see? Just like if you have, let's say, multiples of 5, you have 5, and then you type 10. Once you highlight the 2 and then you drag, look at it, it gives you 5, 10, 15, 20, 50. Okay? So that's the way it works. Is it clear, class?
okay, Mr. Fofan, I think Excel is a different thing. When you do that in Excel, the same number will replicate.
Honey? Excel is the same. Practice it.
I think Excel
If you
is
type
different.
1, 2, and you highlight both of them, you drag, it's the same thing. Excel is the same. Do it, do it. If you're having Excel, do it now. Do it now. Who has Excel? Do it. You have to type 2 numbers, 1 and then 2. After typing 1 and 2, you have to highlight both of them and then you drag. It's going to follow. The same thing with Excel. Is that clear, everybody? Let's move fast. 1, 2. Do it, please. If you have it, do it. If you're having something different, let me know. Okay, so you highlight both of them, we drag, and then we have up to year 5. Is that clear, everybody? Right. So what are our profits after depreciation? We're going to do them in thousands. Okay, our profit after depreciation, we're going to do them in thousands. Let me just do this. I align to the right. I number format with a 1000 separator. I'll reduce it. And I'm going to wrap this. Okay. So all these ones will be in thousands. Dumbuya, have you practiced it?
Yes, I'm also on it.
Okay, I'm talking about the auto copying of numbers. Is it working with Excel?
Yes, it is working.
Excellent. Yeah, it's definitely working. There are a lot of things that work with Google Sheet, works with Excel as well. Okay. And then the year, we can just highlight, then we just center that. Okay, so what's the profit after depreciation in year 1? Give me quickly, please.
12,000.
12,
17.
Next.
17.
17,
28.
28,
37.
37,
And 8.
and 8. Excellent. Okay, what about our depreciation?
Depreciation is 12,000.
Okay, we've
12.
already calculated our depreciation here, 12,000. If we want to bring this 12,000 here, if we want to bring it here and copy it down, what are we going to do? Can someone help me on how to do that?
You said equals to and type B.
Equals, I type.
You click on this cell.
Which
Where
cell?
12,000. Where 12,000 is.
Okay, B18,
Enter.
Enter, But that gives me 12,000. Do I want 12,000 like this, or how do I want it?
Is it not 12,000 that we want?
Yeah, Mr. Fofana.
Yes.
You know, this is it's on straight line basis, so 12,000 gonna be constant for the whole 5 years.
Yes, I know. But if we had done it, look at it, it has given us 12,000 like that. Are we not putting it in thousands? Look at it. Look at the thousands. Thousands. 12, 12, 17. Look at it.
Okay, we need to have it in 12 instead of these 3 zeros attached to it.
Okay, how can we make it 12 here, Nima?
We reduce the zeros.
So we're going to reduce the zeros, huh?
To me, Mr. Fofana, I see is correct.
So I'll reduce the zeros from here. But this is already on the formula. Yes, sir.
I think you are going to format down there at the top.
We're going to format.
Then you go to here, you go to numbers.
I go to number,
Then you select the number, yes. Yes, then you can select this number, the number, select number. In
yes,
thousands.
I've selected number,
Number in thousands.
Okay.
In thousands, yes. Then click there. Click it. Then after you go back to remove the one.
Go back to what?
I mean, you click this. You have to click this one number here. In thousands, yes. Then click here. 0. Yes. This small 0.
I click this one number.
Yes.
Big small 0. This one.
Yes. Yeah.
Okay. I've done it.
Yeah. Yes. That one.
Now it's
yes,
12,000. I don't want to see 12,000 here. I want to see only 12.
Okay. Okay.
It's only 12 that should be there. The 3 zeros should be out.
Yes. How do we do that?
Please teach us.
Huh?
I said you said teach
We don't
us.
know that.
Technique.
Okay. Let's do it simple. So we just come, we say equals, we come here, we say divide by 1,000. If you divide by 1,000, naturally that will be 12. Look at it. Okay? So now what should we do? Because 12 should be the same for all of them. So what should we do to copy this formula to up to year 5? What should we do?
You drag.
I drag, huh?
Yeah.
Okay,
You
I
highlight
drag.
and drag.
Yes, I highlighted and drag, but it has given me 0, 0, 0, 0.
Then you copy, you type 12 again in the second cell, then you drag.
Hey, please. Nima, you have attended Mr. Fofana's class, so don't dismiss yourself, please. Why should you type 12 again? I think I showed you this. I said you should do something to the formula. Didn't I discuss with you the various cell references, absolute cell references, relative cell references, mixed cell references? Didn't I discuss that with you?
Yeah.
I didn't.
You should
You
lock
make
it.
it absolute.
We should make it what?
Absolute.
We lock it. Good. Yeah. We said locking it. Exactly. So we lock it. We should lock the first one, 12,000. How do we lock it?
You press F4.
Okay, you should only press F4 when you are on edit mode. For example, when you are on here, you press F4. Excellent. Once you press F4, $2 sign will be done for you. And then now you can just copy and it will all be 12,000. Is this clear?
Please repeat it.
Let me repeat it. Okay, so what you do is, if you want to do the how to call it, you want to bring the 12 here. First, you say equals, and then you go and click the cell that has it. Okay. Before you do the divided by 1,000, press F4. If you press F4, look at the $2 sign will be there for you automatically before the B and before the 18. Then after that, you do the division sign, 1,000. You type 1,000 and you enter. So once you enter, you have your answer. Then now you can copy this. The cell reference is going to remain. Look at it. If you click here, look at it. B18, you click here, it's still B18. It's still B18 because you have locked the cell reference. You've made the cell reference absolute instead of relative. Relative is by default. If you use one formula I used here and this, okay, if I replicate, if I want to bring the same formula here, that means I'm going to use this. So once I move down once, this is also going to move down once. So it's going to be an empty cell divided by, of course, 17. If you divide a number by any blank number is what? Blank is 0. If you divide any number by 0, it's always what? 0. So that's why we are getting 0, 0, 0 here. Okay, is that clear now, Omar?
Yes, it is. Last time you told us that, like, when you want to make something absolute, if you're, some of the computer, when you click only F4, it will not work. What is the key that you normally?
It's the dollar sign. You can type the dollar sign. You can use the dollar key to type. But all the computers have got, all the laptops, all of them in the whole wide world, they all have F4. It's just that people don't know how to locate their F4.
Sorry, I know that, yes, I have the F4, but sometimes only the F4 will not function. You have to combine it with what?
That is it. If on your keyboard there is a key called FN, FN means function.
Yes.
So
exactly.
to activate all the function keys, F1 up to F12 or F15, to press any of those keys, you have to press FN key first, sorry, before you press the respective function key.
Okay.
That's the way it works. Okay? All right. So how are we going to calculate the cash flow?
We add the profit after depreciation with the depreciation.
With the depreciation. So we say equals C4 plus D4. We enter. And once you enter, it's going to predict that you are going to replicate it down. So you see, it has given you all this. So you just tick the correct. So this is the autofill function. See how intelligent these things are? So once you do that, it has given you everything. So we're going to add in one more column called the cumulative cash flow. I just call it cum cash flow. Okay. So I'm going to copy the format here. Right. So how are we going to calculate the cumulative cash flow here?
Yeah, by adding every subsequent year to the previous one.
Okay. Say current year to the previous year. The current year to previous year. So the current year is this. There is no previous year. So that means we are taking only this. Okay. You see, it has predicted. Okay. But this prediction is not right. So what we're going to do is we're going to take the previous year, we add it to the current year. Okay, so we replicate. Can you see? So you should get 24, 53, 93, 142, and 162. Can you see? So adding a column for cumulative cash flow is optional. It's just to help you to derive your cumulative cash flow in any of the years at any point in time, so that you can be able to know your payback period easily. Okay? So now, what is our initial outlay? Initial outlay. What's our initial outlay? What's our initial capital? The cost of the asset at the
That's
start?
120.
120,000. Okay, so that's 120,000. Now, how are we going to calculate our payback period to recoup this 120,000?
Yes, I think we will add in from year 1 cumulative cash flow to year 2 until we exhaust 120.
Okay, right. So how, well, we have got 93, we've got 142. 142 is certainly more than 120. So what does that say? 93 is less than 120, but 142 is more than 120, isn't it?
Yeah.
Okay, so what can we say just by look of how to call it, by look of the cash? You know, in exams, if you're running out of time, you can easily look at this and then say your cash flow, so your payback period lies between this and that. By getting there, you can get almost 90% of the marks just by doing that.
Yeah, that is automatically, we know that 142 is greater than 120. So, and also 162 is greater than. That means those 2 years, year 4 and 5, are already out of our calculation.
Okay.
We should base our calculation from year 1 to 3, I think.
Okay, so if we have to say that there is a particular year when we will pay back, which year will be that? In which year are we going to pay back? Are we going to recoup the 120,000?
Year 3.
It's in year 4.
Year 4, excellent. We're going to recoup in year 4. Year 3 is not yet. Year 3 cumulative, we have 93. 93 is less than 120, Mohammed. You already said it, didn't you?
Yeah, you're right. I missed it.
So when we're going to recoup our cash flow, we're definitely going to do that in year 4, isn't it? So that means we know clearly our payback period is year 3 plus some months in year 4. Clearly. Okay?
Yes,
so
that's
our
right.
Payback period is 3 years, and we don't know how many months yet. So we need to calculate the number of months. So how can we calculate the number of months? Well, we know it lies in year 4. 3 years plus some months in year 4. So how are we going to calculate the number of months?
Yes, I think, let me try, Mr. Fofana.
Yes, go ahead.
Yes, okay. After we know that after 3 years, then after the subsequent year, the years, that is year 4, we will need some months from that year.
Okay.
For us to exhaust the 120.
Okay.
Then I think it's gonna be like the 120 minus our third year results, that is 93.
Okay.
Then all over the year, the 4th year's cash flow, that is 49. Then we multiply by the number of months in a year.
I think the 4th year cash flow is 142.
Yeah, and that is the cumulative. I mean, I'm talking about the cash flow itself.
Okay, thank you. Okay, so you say equals 120,000 minus 93,000, which is the cumulative cash flow up to year 3. Okay, bracket closes, bracket opens and closes. Okay, so we know that difference is what we require from year 4 cash flow, and we know year 4 cash flow is not 142 but 49. 142 is cumulative for all the previous years, including year 4. But the year 4 cash flow only is 49. So divide by 49,000, okay? All that multiplied by 12. 12 as in 12 months. So that is 7 months. Is that correct?
So, Mr. Fofana.
We have to break even in 3 years, 7 months.
Mr. Fofana.
Yes, sir.
What I did, I think for me, I got like 5 months.
You got 5 months?
Yeah, but what I did is like this, like I took this 49,000.
Mm-hmm.
You know, this 49,000 is for 1 year.
Yes, it's for
Yes.
year 4.
Yes, I divided by 12. I got like for every month how much they should for every month how much are they going to be able to pay, and later I multiply it by 5.